So I'm always talking about the importance of diversification and long-term returns and stocks that stabilize your portfolio. But there's two stocks in particular from an industry that I haven't talked about much that I believe are a great addition to every portfolio. You have definitely heard of these two companies. Everyone has heard of these two companies. I just don't see many people that I know investing in them. So I'm going to start off by saying that nothing in this video is financial advice and it's for entertainment purposes only. So the industry that we're talking about today is the payment industry, and the two stocks, you would have maybe guessed it, are Visa and Mastercard. So we're going to discuss how these are stable investments for the long term and what kind of factors impact them negatively or positively, and what kind of outlook we could expect in the near or further future. So in case you're not sure completely what Visa and Mastercard do, they're global payment networks that facilitate transactions between consumers, merchants, and financial institutions. So every new cardholder or merchant affects their vast network. Their revenue models are highly scalable with low incremental costs per transaction. They both have market caps around like $500 billion each. Their dividends are like around 0.5 to like 1% annual yield. They've both seen around 500% growth over the last 10 years, and they've been growing even more since everyone is going more and more cashless. And there are countries like there are pretty big countries around the world that have pretty big economies that are still very dependent on cash and are slowly like breaking free from that and are becoming more reliant on debit cards and credit cards, which means there is still quite a bit of room for Visa and Mastercard to gain more revenue and growth, because of course they make money from transaction fees of these cards. According to industry research, global digital payment volumes have been growing at double-digit annual rates, with projections showing continued robust growth over the next decade. And this is also my way of getting in on the crypto action a little bit, because if you've been following me, you'll see that I'm not very big on crypto, but I think if crypto becomes what its supporters are hoping for it to become, like if it becomes like the mainstream form of payment, then I'd be very surprised if Visa and Mastercard don't get in on that action and make some sort of debit cards or credit cards for crypto from which they get paid the fees for managing the payment or transaction. In fact, Mastercard has already been working on some sort of platform to accommodate crypto. They've filed patents and partnered with crypto platforms to facilitate crypto-linked card transactions. So if crypto does become what people are hoping for it to become, you can benefit by owning these stocks. Maybe not as much as you would if you actually had crypto, but you will still get some benefit. And if crypto doesn't become what a lot of people are hoping for it to become, you don't really lose anything, because Visa and Mastercard still have tons of business apart from crypto. One of the main attractive points of Visa and Mastercard over other blue chip tech stocks like Google or Apple or stuff like that is that they might not have as explosive growth as those other companies, but they are also a lot more stable and they survive more, especially during turbulent times like right now when there's geopolitical tensions and stuff like that, and people are trying to be more conservative with their investments. These are more like stable foundational stocks, even though those tech ones are as well to an extent, but these are more. So whenever there's some news that shakes up the market, I notice that the tech stocks get more affected and get more volatile than these two. So when people are spending more money and there's more inflation or whatever, they benefit from this directly. And they benefit from pretty much like everywhere around the world. So what about right now, these unpredictable times where like some people are predicting a war might break out and some people are concerned about tariffs and changes in governments and powers around the world or stuff like that. So how would this affect these two stocks? So in a time of war, there will be usually less consumer spending, so these stocks would get affected negatively most likely, but then you could probably see a good opportunity to enter a stock like this. And when tariffs are imposed, that would also probably make people spend less because they might find goods and services more expensive. That would probably hit the stocks a little bit as well, probably not as much as if a war broke out. But these would both be opportunities to increase your position in these stocks, and then when things clear up, they'll go back to where they are meant to be most likely. So tariffs would also disrupt global supply chains and slow down international trade, which with lower trade volume, there'll be fewer cross-border payments, which are a key revenue source for these companies. And during periods of high tension, especially like if there's countries that have problems with America, for example, they might boost local payment methods or even crypto options that would be more unconventional or not use Visa and Mastercard. So these would obviously be times that would not benefit these companies. But overall, in those kind of situations, there would be many other stocks getting affected as well. But for me, the main point of investing in these is that if I'm trying to build a stable, diversified portfolio, it ends up becoming too tech-based. It becomes all the Google, Apple, Microsoft, it just becomes too much of this and too much tech, and then when anything goes wrong, then all the tech collapses. So this is like a little hedge sort of thing. So you have a different industry that reacts slightly differently. Honestly, like I feel comfortable putting a large percentage of the portfolio into these companies. And by large, I mean like maybe up to 10% of the portfolio, for example. And they give you a cute little dividend to go with it as well. So let me know your thoughts on these stocks, if you already own them or if you're considering buying them. Let me know your thoughts about the video in general. If you have any other comments, please comment them below. Don't forget to like and subscribe, and I'll see you in the next video. Bye bye.